the draft 2021 municipal audit will need to be amended for the inclusion of new contingency note as it relates to the guarantee of the Infrastructure Ontario loan relating to the Castle Homes redevelopment project, and the municipal auditor proposes the following contingency note to be added to the financial statements, which requires council's approval. Subsequent to year end, the municipality entered into a guarantee and postponement of claims agreement with the Ontario Infrastructure and Lands Corporation as it relates to OILAS financing for the Board of Management for Castle Homes Long-Term Care Facility redevelopment project. All 9 participating municipalities must agree to entering into this agreement in order for the redevelopment project to proceed. The municipality's share of the co-guarantee on the project is a maximum of $803,817. Now, therefore, be it I think I've made a mistake here.
You're doing fine.
Now
That.
Pardon?
So now therefore be it resolved that and continue
Council
reading.
for the Corporation of the Municipality of Calvin hereby acknowledges and agrees to contingency note being added to the financial statements.
Okay, thank you. Do you have any opinions on this, Councillor Cross?
No, it's pretty straightforward to what we already discussed.
Councillor Castline, do you have any opinions? You're on mute, sir.
We have discussed this very thoroughly, and we came to the agreement that this was the best solution. So I have nothing further to add. Thank you.
Thank you. Councillor Shippen?
No, I have no discussion.
Okay. So I'm going to call this to a vote then, please. Councillor Castline, do you vote yes or no to accept this resolution?
Yes, I do.
Councillor Cross, do you vote yes or no to accept this
Yes.
resolution? And
Yes.
Councillor Shippen, do you vote yes or no to accept
Yes.
this resolution? And I vote yes as well. So this resolution is passed. Thank you very much. Next item on the agenda is 3.2. It's initial 2022 budget discussion.
So if I might, Your Worship.
Yes, please, go ahead.
Mary, can you allow me to share my screen?
Can you share now?
Nope.
Yeah, there's nothing that's saying you can. It says as long as one
Now I
participant
can.
can. Okay.
Yeah, it just allowed me to go. All right. Okay, so let me make this a bit bigger. Oh, maybe not that big. So I imagine this is not the kind of budget council's used to looking at. I've only seen a printed copy, and we weren't able to find where it was like a recent version of the budget. So how I typically do a budget when I'm working with a municipality is to put things in the same categories that the FIR would do. And these numbers that you're seeing here tonight may be modified slightly when Suzanne does a bit more of the fine tuning. Some of the things that council has to realize is I hoping you can see here. Let me just see if I can actually put some color in it. So you can see here how transportation services has a negative expense. That's just not possible. What is happening here is because you've had capital expenditures, they're being put in as expenses and then removed, and there's some accounting things that are going on behind the scenes. But what council really needs to look at is the expenditures here. And if you, the 2020 wages have not been put in yet. That's largely because I ran out of time. The way the wages are broken down, they're broken down by each of these categories. And so there's wages and benefits and all of these different line items you have to pull in. And so to make sure that it's accurate, it takes a significant amount of time. I'm used to a budget where, you know, employee totals, this person makes this amount of money plus the benefits, you add it all together. In your municipality, it's all broken down so you can actually look at how much it's costing per service, or at least reasonably know how the cost per service is working. And when I looked at the numbers, I noticed a significant decrease in the, and I want to look at taxation right now. So I'm going to highlight this. This is the amount you've actually collected in tax, or you actually billed out in taxes. And a couple of years, you actually budgeted more for your taxes than you actually collected. And I wasn't clear as to why that happened. But what I noticed is in 2020, it significantly went down. And the cost of living has not gone down. So I'm wondering if when council was budgeting over the last few years, if there were reductions in service or if there's something else that we need to be aware of when we're doing, like providing you with the final budget. So if I might, Your Worship, ask council for feedback on that right now.
What I recollect from the 2020 year is that there was a significant reduction in the reserves. We didn't put anything in the reserves until at a later date when council decided to, after a report from the auditor, that it was not a sustainable situation, that we put back another $100,000 in reserves, which was still way lower than what we normally do. So that is one explanation why the taxation was so low that year. Another reason is that the employees absolutely did not get anything that year, none whatsoever.
Sorry, Your Worship, I'm just making a couple notes here. Okay, so as you can see down here, I have, I'm hoping can you continue to see what I'm showing right now? The transportation services. Maybe I better make it a bit bigger. So how this works, what I do is so that when we're looking at things, your roads department deals with their things. I've removed the wages and benefits from that, and I put it as a separate line item. in most small municipalities, someone could actually add up all the costs and determine what an employee technically could be making. And that's really contrary to what MFIPA says about an individual employee's rate of pay. So you won't see wages and benefits and costs for the WSIB, employer health tax, those kind of things. There's a separate schedule for that, which I will not share on live streaming. Anyway, as you can see here, there's been sometimes that there's a bit of an inconsistency in the chart of accounts. These numbers came from the financial program that you use. It's called, iCity Vatum. And we've taken what's in there. So I want to draw your attention to this number here. And when I was speaking with Suzanne about these numbers, all of these ones actually, it appears that these amounts may have been added into the financial system after the year end. This is what it looks like that they're taking out of your operating expenses and saying it's capital. I'm not clear if council actually has done an operational and a capital budget in the past. And I'm wondering if you could provide us with some feedback on that.
That year, I think we built the bridge at an amount of 600 and somewhat $1,000, and that amount came for a major part out of reserves, and for another part out of a grant from the government. So the $658,000, that doesn't surprise me, because that would be the cost of the bridge. But it should have come out of reserves, not out of operating expenses.
And I guess that's what I'm actually trying to understand, council, is the fact that because these are counting entries, and this is the information we have to work with to try to put together a budget. I understand how you have to capitalize some of your expenses as part of your asset management and amortization and all of those different costs. But typically, I am used to presenting a budget that is operational and capital. So I'm going to go back to the summary, and you can see here where I've got capital stuff included, which says capital expense in the GL. I'm not sure that these are all capital costs, because in order for us to go through each one and analyze it, it's just going to take a lot of time. And as you know, we would like to get to a point where we can pass a budget and be able to issue the bylaw for your tax rate for 2022. So for our meeting on Tuesday next week, I wanted to be able to kind of understand where we might need to look to change some of this stuff. So if you look here in terms of the actuals, this is what's been spent to date. And I think we're on cue, because coming into the summer, there's going to be bigger costs. A couple of the concerns that I have when I was looking at some of the numbers, let me go and look at, again, transportation is one of your biggest costs. And let's look at trying to think trucks. I know there's one for trucks here. I want you to look at the cost here for fuel and oil. Oops, 2021, actually, I guess I should fix that so it's not too many twos. In 2021, the actual for this account was 17,000. We're already at 13, and you're only this is at May 31st. The rates for fuel are so much more significant now that you're probably going to be looking at a lot more money, depending on the work that is recommended by Chris to carry out for this year. And so when I go back to the summary and I look at where you are here, it looks reasonable. And if you kind of double it, you get an idea of where you ought to be. But there are some expenses that are going to continue to skyrocket, and there are some things that are not included. As an example, you've got only a portion of your winter maintenance. If November and December become fairly significant snow months, it's going to increase your cost. The summer projects have not been determined, and Chris is working on that, so that'll be the information that comes to council on Tuesday. So I guess what I want to talk to council about right now is we're going into an election. Operational costs are going up, even things that council cannot control. A zero levy increase is not an option. I think the cost of living has gone up somewhere between 4.5% and 5%. I don't think that council can stay status quo this year as much as most like to. And if we had been working with you for over a year, we would have started the budget process in August. You don't have a budget policy. And so typically what would drive your budget are things like your strategic plan, your asset management plan, the needs of the community, the service levels that you're deciding to offer. And those things have not yet been clearly defined. So I'm going to encourage council to keep the budget realistic, knowing that just the basic operational costs are going to go up. Like, you all know what gas cost last year at this time and what it costs now. And you're coming into your summer season where the grader and all of your pieces of equipment are going to be worked more. And it's, who knows what it's going to be like in November. A budget is a living document. It's not something that because it's been set, it has to stay the same. It's up to your staff to review it, to come back to council and say, oh, we made a bad assumption here and we're under budget, or here's some areas where we over budgeted and we can move this to now deal with this issue that's come up. I would like council to provide direction as to what the levy looks like. So I'm going to go back down to what was actually brought in with taxes. And that's not the levy, but that's the amount that you actually calculated. And so once the levy is determined, as you know, it's divided by the assessment and you create the tax rate. Everybody's property taxes are based on the tax rate. During the year, sometimes some property values are reassessed and they drop, and it can go up and down. I don't have copies of budgets from all of these previous years to be able to say, here's how much was actually budgeted for these pieces. So I'm looking at what was actual. And I'm suggesting that you've gone from a situation where in 2021, you're only $20,000 higher than what you were in 2019, and the inflation costs are higher than that. And your staff have not had an increase in pay. Your worship, I think that the conversation this evening is what percentage of increase does council have the appetite for, knowing that the cost of living is going up by 5%.
I think it all depends on what each department brings back as their requirements. And then we have to look at the cost of living regarding wages. Gasoline's going to play a part in that. I know, like, purchasing any product now, like for repairs, whether it be tires or chains or whatever, okay, is substantially higher. I think it would be, I was kind of looking around at other municipalities and they were around 4 to 5. And I don't know if we can do that in our municipality and do what we need to do for to run the municipality and to treat our staff appropriately and financially. Anybody else? Councilor Cross.
I have been,
Councilor Cross. You're on mute. There
Sorry
you
about
go.
that. Sorry. I know that Chris has already mentioned that this year's cost for the dusting for the roads is already $6,000 more than what was budgeted. Like you said, the cost of gas or diesel has extremely gone up. Like you said, the staff hasn't had a raise in 4 years. And groceries are going up, skyrocketing. The other thing that I would like to talk about is with our new staff, there's some training that needs to be done. We need to think about investing into that with our staff to get where we need to have them to be. I have no idea what that would even look like for training. Peggy, do you have any idea of what that would entail?
If I might, Your Worship.
Yeah, please.
I
I
look
want to
at
make
the,
sure that we get everybody else's thoughts as well, though.
sure. So I would just like to say that I kind of look at the right now, because it's not August and we're not building a budget for a coming year. We're halfway through a year and we have to get through the next part. What I consider is you have a level of service that you're already providing. You have a new team of people in the office, or a partially new team of people in the office that do require training. And I'd rather work backwards from, okay, so this is the cap. We don't want to do any more than a 3% increase on the levy that we had last year. End of story. Then I'll come back to you with a budget. This is it. Okay, if you're going to do 3% increase, here's how we recommend you spend the money. And that might mean that you don't ditch certain roads, or that you don't upgrade something, have a capital project that you may have had on the books for this year. Those are things that are realistically challenges council could have in deciding at the end of the day, what do we not do to make sure that we can balance to zero. I'm concerned that you cannot do a zero across the board. If you do that, then you're going to be looking at a surface cut for sure.
Councilor Castelline.
considering that we had a tax decrease in 2020, and if I do a quick calculation, I would say we should have had a 3% increase from 2019 to 2020, and then another 3% or even more from 2020 to 2021. When I did my quick calculation for 2022, I would be more than happy if we can keep it under 6%. But what the other municipalities do at 4 or 5%, I think that would be very reasonable in my humble opinion, considering that we did do a decrease in 2020 and we have to catch up. We just cannot continue on the low numbers that we had in that year. Any percentual increase is based on the low numbers that we had in that year. So it is a catch up, and I cannot see a 0% increase across the board, because as Peggy said, that would be a service decrease. And in 2020, we all knew that decreasing taxes would come and bite us in the back in the coming years, because you cannot just do that. You cannot maintain services for less money. That is that's a no-brainer.
If I might, Your Worship.
Yes, please.
I absolutely agree with Councillor Castelline, and it brings to mind one of the comments that, and I'm going to name his name, Tim McKenna, because I've said this in an open council meeting in calendar, is he says you can treat your staff poorly or you can pay them poorly, but you cannot do both. And you're going to continue to lose staff if you are going to underpay them and not give them the comparative wage that they could get elsewhere. So you're going to lose your talent if you don't keep them. To me, I think that this year, 2022, for your council ought to be focusing on staff. And I agree with Councillor Cross. It's going to require training. It's going to require realignment of positions. I have a strategy on how this can work for you. But I also know that we always in communities deal with people who are on fixed incomes and concerned about assessment increases, and the cost to each person individually can be a challenge. And I think there might be some other things we can do to assist with that. I understand that in your municipality, you're one of the few that I know of that only has 2 tax due dates. You have an interim due date and a final due date. Most that I'm used to have 4. So the interim taxes have 2 different due dates where you can pay them, and the final 2 different dates where you can pay them. Yes, it creates a bit more work internally, but it allows, the tax pain to be spread differently. And there are communities out there who have got policies for the seniors where the seniors can pay monthly, and penalties and interest are not applied unless, the account, someone doesn't make the payment or certain things happen. But there are things that you can do to help your taxpayers be able to make the payments that they're required to make. Council cannot run a government without the tax burden. And I want to show you some of the stuff here that I was looking at. Let me see here if I can get to it quickly. Where is it? Health and Social Services. So when you look at your budget, your staff wages are somewhere around $400,000. $240,000 you're paying for, I'm assuming it goes to the DSAP for Ontario Works and for childcare, all of that kind of stuff. It's amazing how much of your budget is actually mandatory and not discretionary. You look at community and social services, and I'm wondering here about this transfer to reserves for Mattawa Senior Home, and you're having to pay Castle Home. So you're paying for 2 long-term care facilities? Is that what I'm understanding from this?
We can,
Oh, Your Worship, there's, I can tell you're talking, but I can't hear you.
I don't believe we should be paying towards that. The Mattawa Senior Home has its own funding from other sources. And a long time ago, when we sat down at meetings with all the mayors together, part of that agreement was that we wouldn't pay into that until we're finished paying Castle Home. And Castle Home's going to be on the books for a long time.
Well,
and if we start paying the Mattawa Senior Home a levy, then they already have an income coming into them to do that. So what are they going to do with that money? We don't need to do that, right? I don't think we should be even thinking about it.
And I don't think that you are, but what you're doing is money is going into the reserves here
Right.
for this
Yeah.
Mattawa senior
Yes,
home, and I'm not
you're
sure
going into-
why.
Yeah,
We were putting it away for when they did decide to start charging us the levy. So we were trying to plan ahead for the payment. So that's why it's in reserves.
And
They
that's why
haven't
it's
asked us.
inconsistent.
Yeah,
Okay,
we agreed, the municipality of Kelvin agreed to pay part of the construction costs, not of the day-to-day maintenance. It was a requirement because all the municipalities had to agree to supply funding for the building of the Mattawa nursing home. Otherwise, it would not have been built. The province would not have given permission to go ahead. So that's why we had to commit to a certain amount of money payable in 25 years. So that's why we have been setting it aside and prepare for when the Mattawa nursing home is actually going to charge us for that commitment.
okay.
If I remember correctly, Mr. Fidelli said, back when we were talking about Castle, why would you pay the Algonquin nursing home, okay, or the new nursing home in Mattawa? They already have the funding themselves, right? He said that himself.
But what I understood from that is that they have the daily operating cost covered, and this is still an amount on the books from the construction.
So I would assume that there must be some kind of agreement somewhere that we should be looking for.
Yeah, but that goes a long time back, 2016, 2017, something like that.
Mayor Brown. I don't remember the year. I know we sat at the table and we said that we didn't have to pay anything until we were finished Castle Home, and that the allocation of funds would be by population and not by assessment. I don't think we owe them any money, but we'll have to look and find out.
Well, this looks like you're putting it away, but I found it interesting that in 2019, you're putting 52,000 and then only 23 over the next 2 years. So I wondered if there was some kind of a formula or if there's something there that you need to be, it's a reserve fund for the future. How much do we need to be budgeting this year to make it work?
I think that was done that way because we needed money to do other things, and we didn't put that money away for that project in those 2 years, right?
So one of the other questions I have actually, Your Worship, is, I'm going to go back here. I'm used to doing a budget where you transfer money to reserves. Right now, it's buried in these costs. Hopefully by Tuesday, I'll be able to pull out how much was going into the reserves by each, like totally from the departments here. I'm also used to having an operating surplus. What you have in your books is a working capital. Does your operating surplus annually go into the working capital?
What was your question?
So operating surplus at the end of the year, if you haven't spent so you budget $100,000, you spend $98,000. Municipalities are required automatically to put that money into a reserve fund or to roll it forward as part of your next year's budget. And I don't see anywhere in the financial records about a surplus. But what I do see is that there's a line that says, let me find administration here. This working funds. And I'm wondering if if the working funds are equivalent to the,
Excess.
I'm trying to make it a bit bigger there. So working funds are monies you put away to offset operational costs in the future.
Like
Typically,
contingency.
surplus monies would go into this. And I'm wondering if that's how you capture it in your records, if anyone knows.
From what I remember, because now I see the 34,000, and that rings a bell with me, because last year we had, or the previous budget, we had a $34,000 surplus, and part of it went to reserves, and part of it went to cover something else, but I don't know exactly what it was.
Brushing? Could it have been brushing?
No, that was Chris, that some of the brushing was not done in 2021, and he did some of it in 2022, but he used what he had left over in 2021 to spend in 2022. So that, I don't think that was it. I think Cindy referred to the 34,000 in the FADIM software, that it was going to be transferred to reserves, and then reserves are split up into different categories.
And we have requested that the auditor provide us with the breakdown so that we can actually work with that to give council better advice on how healthy your reserve funds are and all of that. Let me just go. Here for a second. That's a little bit big. I wanted to look at some of the costs for fuel, because this is I know this is heating fuel, but if you look in 2019, 20 was a bit higher, but 2020 and 2021 were less than 3,000. You're already at 2,200 and we're only halfway through the year. And November and December are going to be additional months. So I can see there are going to be line items that are going to go up significantly when we start to actually populate this with the proposed amounts. There are things that we absolutely have to spend money on. There are things that we can choose not to spend money on. And that's why I really want to get to where council's comfort level is. I don't want to come back and say, if you want the same level of service, it's going to cost you 40%. And then I have to go back and reduce here, there, and everywhere. I'd rather know going in that council's top is to say, we're going to have 4.5% or 5% or 2%, whatever it's going to be. What's that look like? Then we'll come back with a budget and say, okay, here's your two options. You invest this way or you invest this way, and this is what it's going to look like to stay within that bit of an increase. And I agree with what Councillor Castelline has said, the fact there isn't a council out there who should ever have a zero in, or more importantly, a decrease, because you never have enough reserves. One emergency can wipe communities out. You have to look at the fact that costs keep going up. People expect a certain level of service. It's very difficult to reduce the service that you're providing. And insurance costs alone, like if you look here for insurance for fire alone, you've gone from 6,000 in 2019 to almost 8,500. That's a significant jump. That insurance cost is not going to go down. And let me see what we have in.
So I'd like to speak to the heating fuel one. We did heat with oil, okay, and then we changed over to propane, which reduced our charges significantly. But now with the cost of propane and everything going up, okay, that's why the substantial increase in the cost.
That makes sense. That's why there was such a decrease from 2019 to 2020.
Yeah.
Understood. Okay. Where was the other one I wanted to go to? General government, insurance. I don't think it was that one. I think it might have been recreation. Again, insurance. You know, it's $500 more for recreation over last year. So insurance has gone up, fuel costs are going up. I don't see how council can say, no, we're not going to do an increase. Well, you can, absolutely you can, it's council's prerogative. But your grant money is not going up. In fact, your grant money is going to decrease over time. You're not going to have the resources that you have. You have assets you have to manage. And when I was speaking with Suzanne, it's going to be very, very difficult if you don't at least look at the cost of living as an increase. Your worship, Councillor Cross had her hand up.
Go ahead, Councillor Cross.
I believe when Marjorie came to meet with the previous council, I believe we had first been at, I think it was 11% deduction in our taxes. And she had said that this was not sustainable in any way. We slowly increased it and put a lot more into reserves. But she had also mentioned how a lot of the funding that we used to get, we were down at least 40% already, and that there would be more. And with the service costs for where we have no choice on paying for social services and policing and the rest of that, I think we ended up with a 4.25 deduction in our taxes last year. And she even said then that wasn't, she said we were going to be into trouble if we continued to do that type of budgeting. And last year, as I said earlier, none of the staff in the past 4 years have received a raise. And the cost of living has significantly gone up. Nobody wants to pay more taxes. I don't want to pay more taxes. It's obvious there's a whole lot of things here that we're not going to have any control over at all. So the minimum should be what we deducted last year for sure. We need to try to get ahead. We need to raise it up a bit.
So if I might, your worship, I think that if you've had a 4+ percentage deduction and now you've had a 5% roughly cost of living increase and expenses generally, you're looking at a 10% increase just to cover basic costs. Now, that doesn't mean you can't sacrifice levels of service. I understand that not everyone knows what that means, but the idea being, well, you don't cut the grass at the ball field every week. You cut it once a month. Your roads don't get plowed as often as they do. You follow the minimum maintenance standards, and most of your roads are class 6. They wouldn't even need to be plowed for umpteen days. No one's going to be happy with that kind of level of service. And so I get it's a fine walking line, balancing beam, whatever. The difficulty that you have is being a small community is not an excuse to say we ought not to pay. if people want a level of service, there's a cost to having that level of service. The province has created mandatory expenses. And when I looked at this, and I haven't done the analysis because I'm almost terrified to, because I expect that a lot of your mandatory costs are probably 78 to 85% of your actual levy. And that's significant. So those are costs you can't do anything about. The health unit, the social services, the Castle Home, the cost for policing. These are
School board.
mandatory things. The school board. Well, the school board, I didn't include it here. I took them out because it's money in, money out. The only problem with the school boards is that if people don't pay their taxes, you have to pay the school boards, and you're having, it affects your cash flow. You don't get any administrative cost for doing it. It's a cost in time for your staff to do it, but you don't see any benefit.
But even if you, like, say, just talk, I got nothing at the school board tax, but just taking it in as a form of tax, all right, and then just giving it out, you have to give it out. It's still a tax, all right, that costs us money, right? Costs the municipality money.
It costs the taxpayers money, yes.
Same as social services, same as everything else. It's a tax. It costs everybody money.
North Bay Mattawa Conservation Authority also.
That's another one.
And we've been already we're told that there's going to be an increase with the Conservation Authority. So yeah.
And I guess that's the point, is that we know that there's going to be an increase everywhere. Everyone's going to be increasing based on the cost of living. You're already behind the 8 ball because you did a year where you reduced your levy and your tax rates. So now you're going to have to either increase the levy or dip into reserves. I just want to get a feel from council where we go with this, because quite honestly, I could put together a budget and say, hey, you want to continue to provide the service you provide right now, it's going to cost you $1.8 million. And you're going to go, ooh, that's way too much, because that means everyone's taxes are going to go up by. I'd prefer us work from, all right, we know what we levied last year. We know we have to increase that levy. Let's work backwards from there, and I'll make recommendations as to what should be cut. Maybe you don't do as much ditching. You spread it out over a period of time. You have a different cycle for those things. Because I know one of the other things we haven't counted for in here yet is the repayment for Castle Home, because we don't know, and it may not hit the books this year. It might not hit it until 2023, but it is something that you're going to have to consider in the future. And one of the trainings I've been at, I've heard a facilitator say that councils have to be really careful that they don't save themselves into a crisis. And that's what happens when you start to reduce levies and you keep zero increases, and all of a sudden everyone thinks you're awesome until the year when now all of a sudden you have a 24% increase to cover the basic costs. So, Your Worship, if we, oh, sorry.
What was?
Sorry, I was still on mute. For example, let me just bite the bullet and go as the first person to say I would not mind personally 5%. Why? Because for me and for my family, it would mean $12 a month. That $12 a month makes sure that our employees can actually continue buying the groceries without having to say to the cashier, well, I work for Kelvin, I qualify for a discount. So 5% for me would be $12. I live in an average home. My house is assessed at a little bit over $200,000. So that would be, anybody can calculate from there what it's going to cost them.
Okay, thank you. Anybody else? I said in the beginning 4.5 to 5, so I will be good with 5 as well.
And the 5% is actually below of what I think it should be, but
But will 5 get us out of the hole that we've dug ourselves? If based on everything that we're, like, if we didn't raise it or dropped it by 4.25, and then the cost of living has gone up by 5, we're at 9 already, and we're only gonna, so we're still gonna be 4% behind. And that's not going to be helpful for any of their services, for any of the must pay items that we have to pay. And it won't help us get anywhere with our reserves either. Like we'll have nothing to put away, nothing for the rainy day emergency. And I'm really don't want to see my taxes go up to 10% or anything either. But I mean, like with the way everything is going up, even for gas, like, yeah, I don't know if 5 is enough.
well, if you would think about catching up in 1 year, then it is indeed not enough. But we have to set a first step, and I think the first step would be, in my personal opinion, 5%, and with the consideration that in the next years we actually have to increase taxes, maybe a few tenths of a percentage points above the rate of inflation, just to catch up. We cannot catch up in 1 year. It has to be a multi-year process, because the hole that we are finding ourselves in now was also a multi-year process. And we cannot just jump out of a hole. We have to slowly climb out.
Look at the plan.
And we have to think about all the people that are on fixed incomes and don't have the money to be able to pay for a huge increase.
For sure. But
It's gonna hurt.
we should also be looking at the policies that Peggy was talking about, where we change how we administer the tax and have a different way for seniors to be paid.
I really think the monthly is a good idea. As an option.
And depending on the circumstance, maybe that's not something that should only be for seniors.
Yeah.
In 2020, when I said, and I was outspoken about the tax decrease, I said people that pay their taxes through the mortgage company have no immediate benefits. People that plan for tax payments and put it away in a savings account, they have no problem with the taxes. It's also is mainly those people that are already having problems with paying their bills that would have a problem with an increase. So if you plan for taxes, then it shouldn't be a problem. If you pay your taxes through the mortgage company, you shouldn't have a problem. It's for those that are already finding it hard to meet their monthly budget, and they need to be helped. And I said that in 2020 also, they need to be helped. Maybe we can reach out to them because we generally know who they are, or at least at that time, Cindy knew who they are.
I think you might be surprised at who's having difficulties making their ends meet right now.
And that actually is a really good point, Your Worship, that Councillor Castelline has just brought up, because my experience has been the seniors who are on a fixed income absolutely pay their taxes. That the first ones in the door that I'm used to with their, either post-dated checks to pay because they're not going to be here on the due dates, and they've planned for it. But there are those who just can't, and I think that being flexible is the way that the municipality can help. And the province sets the rate, the maximum rate you can charge for penalties and interest. Everyone just chooses that rate. You don't have to choose that rate. I don't think that, council needs to be charging credit card rates for people who are unable to pay their taxes. I've also seen on the other side where there are people who just refuse to pay their taxes until, it's close to the day when they're going to lose their house, and they come in and pay them off with all the penalties and interest. The policy that council can have is that you have an opportunity that will waive the penalties and interest if you're on a fixed income and you make your payments. The minute you don't make your payments, we apply the penalties at that point. Like, there are things that can be done to help community members be able to pay their taxes. And I did look at your tax arrears, and they're not outrageous compared to the size of your municipality. Like, the people are paying for the most part. My bigger concern is when you're going to have the results of the next reassessment. And with the housing sale prices that have happened, everybody's property is going to escalate differently. And I can remember preparing a report for council when they were wondering, well, how's this going to impact our taxes? And I said, I can't tell you, because your property is going to be different. You could have a $5,000 increase, and so could your neighbor, but his goes down and yours goes up. It's the chart I prepared. It looks like an ECG on steroids. It was just like this. There was no bell curve. You couldn't predict how much someone's taxes themselves are going to go up. All we can do is look at the levy, and then the levy's divided like a piece of pie, and everyone has to pay their share of the levy. And I think that the best we can do is look at what we're obligated to pay, look at what we can wriggle around. And one of the things I will challenge you to do in the future is that at every budget, you put money away for your election, so that in election year, you're not paying for an election. It's one of the things that I think about when you're going to need a roof in 5 years on your house. You borrow the money, or you put the money away over a period of 5 years, so much per year, so you know that you can afford to pay for it. That's what it comes down to. The concern I have for your community at this point in time is you seem to be in fairly stable shape. The issue is you're a little bit further behind than you ought to be. The asset management plan is going to show us just how far you are behind, and we won't have that information until after the budget is passed, or around the same time the budget is being passed. I would encourage council, knowing, yes, there's an election, but I think that the conversation about budget needs to start in August with future plans and coming up with an idea of where you want to go, where the community ought to be going, and then the new council can work with that moving forward. I dislike having to pass a budget this time of the year. I really like to have it partly agreed to by December, waiting for some final numbers from some places that they don't have their stuff done yet. Your budget is not that large that you can't do that. It's about planning. And I know this has been a crazy year for your council because of the staff turnover. But I do believe that if we can look at, let's say 5%, see what that looks like, I will do some analysis on how that's going to affect your property owners.
Councillor Cross?
Well, whatever number we pick, we're gonna be chastised for it anyway. I argued about it last time about how low it was going to be. Nobody was going to remember the savings that they got last year once they were gonna get this year's numbers. I think we should start off at 6%. See what Peggy can come back at the next meeting. If we can wiggle it down a little bit with any suggestions, then we do that, but we have to make up for, I mean, we knew that we didn't know that with COVID, what type of cost that was going to cost us. I'm at 6%.
Councillor Shipman.
That sounds reasonable to me. If Peggy can come back with 6 and we need to, we can wiggle it down to 5. If at least we have some room to work.
Councillor Castelline.
I said earlier 5, and that is mainly because that was the current, not necessarily the current rate of inflation, but was the rate of inflation of 2 months ago. And I think the current rate of inflation will not continue to be this high. It will go down eventually towards the end of the year. So I think an overall year-to-year of 5% is just for the current rate of inflation. That is nothing, no improvements in services, just maintain the status quo. And that is I think at 5%. 6%, I can still live with that, even though I am on a fixed income and I only have my pensions. But I'll eat less fresh fruit. That's I have to go to the canned ones.
I personally think that 6% is too much. Like I said before, there's a lot of people in this municipality that don't make a lot of money. They're on fixed income. Maybe they're farmers just making ends meet. I think six is too much. I'd like to see 5 personally. And I know we've got 2 and 2, but that's my thought. That won't be sweet.
Okay, so if I might, your worship, let me see what I can do. And land somewhere between 5 and 6 and closer to the 5 if I can. It might mean a different strategy. One of the things I know, so the drivers of a budget are your strategic plan, your asset management plan, your reserve policy, which I know you don't have, and how you invest your money, which I also know you don't have an investment strategy. That is something else council should consider adopting, is instructions to the treasurer on how they can invest the money. The Act gives you very specific things, but what are the things that we've done in other municipalities that can be quite creative is you've got a reserve fund for a landfill, you know, it's locked in, you can't, it needs to be there for 25 years, but you need to buy a new truck. So you can loan the money to yourself and pay for that truck over the next 5 years by paying the money back to the reserve fund with a small percent of interest if you wish, but you don't even have to do the interest because the money amount you're making right now on investments is so small. If you get to a point where you can invest and you can make a good amount of money on your investment, it certainly does make sense to try to do that. The other thing that councils don't always look at is their fees and charges. Always at budget time, it's the time to say, okay, are we charging enough? Are we recouping our costs? And I can tell you that the idea of the building inspector and that department is it's supposed to be revenue neutral. whatever cost there is, the fees that you are associated with that service should cover it. Although I also understand that there's years when you don't get too many building permits. But the idea is that the tax, the general population shouldn't have to subsidize for someone who wants to build a home. So some of the services that you're providing right now might be at an amount that's not covering the cost of providing them. And I think it's something we ought to look at. So if I can do that by looking at, okay, so here's where the money coming in is doing okay, and here's where you might want to consider some different charges so that you are actually covering your expenses.
Are you also going to look at reduction in service? Like maybe not a withdrawal, but a reduction? Yeah.
I think it's going to be inevitable, Your Worship. I think that part of my suggestion already will be that you maintain that the municipal office is closed on Thursdays, that you look at some strategies for your winter ice. Maybe council restricts the time frame, and it's not hurry up and get it in. It's that we don't put it in until January 1st, and it's there from January to March, so we can reduce the amount of overtime. There are things that can be done to reduce cost by narrowing the scope of the service and really defining it. With the roads that you have, you could say that I've seen municipalities where they say between 11 o'clock and 4 in the morning, we're not providing snow service in the wintertime. We don't have enough staff. So we have to say that between this hour and this hour, we are not going to provide that service. You are able to ensure that school buses can travel and you're out there at a certain time, and those hours might not work for your community. You could choose what they are, but that's the concept. That way your staff have enough downtime. You know that they're not working past 11 o'clock. They're not going out for a call. Even in a big snowstorm, it'll wait till the morning. It's in communities where you have people who work 24 hours a day and you have shift work and lots of them, it can be a problem, but in small rural communities, I've seen it work.
Okay.
Okay, so Your Worship, if I might, just to kind of confirm direction, we'll come back with something that is around the 5%-ish marker, see what it looks like and give you some options.
I think that's what we agreed to.
And with that, I will stop sharing my screen so that Mary can put the agenda back up.
Okay. All right. Next item on the agenda is closed session. 4.1, moving into closed session, the resolution for that. So I'll need a mover and a seconder for this. Councillor Cross, can you move this one?
Yes.
And Councillor Castellane, can you second it, please?
I still don't.
You still don't, what?
Oh, I think we've lost him.
I did a resolution.
So can you second this resolution, Councillor Castellane?
There it is. Yeah, I can second it. Yes.
Okay, thank you.
Now therefore be it resolved that Council for the Corporation of the Municipality of Calvin hereby move into closed session at 8:13 p.m. pursuant to the Municipal Act, Section 239, 2B, to deal with a personal matter about an identifiable individual, including municipal employees, Section 239, 2D, labor relations or employee negotiations, Section 239, 2F, for council to review a legal matter and give direction to municipality's legal counsel, which will be subject to solicitor-client privilege to deal with 1.11, Lalonde legal matter, 1.12, employment contracts, employee wages, and workload management.
Thank you, Teresa. Any opinion, Councilor Castelline?
No.
Councilor Cross?
No.
Councilor Shippen?
No,
Okay, so I'm going to call for a vote to move into a closed session. Are you in favor to move into the closed session? Yes or no, Councilor Castelline?
Yes.
Councilor Shippen?
yes.
Councilor Cross?
Yes.
I'm in favor as well. So this resolution is carried.